wealth management industry is at an inflection point. Even when the last 2 to 3 years have upended markets, most of the investors focused on recalibrating rather than panicking and exiting their portfolios. India actually saw a record 14.2 million demat accounts being opened in FY21 alone. Historically, 95% of Indian household wealth was stored in physical assets such as real estate and gold. But now investors are moving away from physical savings to financial savings. If you also look at the new generation of investors, that is Gen Z and millennials, their approach towards financial planning is combining financial goals with ethical and life goals. They're looking for more holistic investment options that include retirement planning, impact investing, estate planning, and even social welfare. Welcome to HDFC Life Presents Live Sessions partnered by ET Now, an initiative to raise awareness about insurance as a crucial financial planning tool where we're going to be discussing pertinent points and topics around financial planning like this and more. I'm Ayesha Faridi and I'm joined today by Mr. Lavneesh Gupta, Group Head Bancassurance, HDFC Life, and Mr. Gunjan Sharma, Head Distribution, Life Insurance and Investment Products, HDFC Bank. Thank you both of you for taking the time out and speaking to us today. Gunjan, let me start off with you, with your vast years of experience. Just wanted to understand, because life has completely taken a 360-degree turn in the last 2 to 3 years. What are some of the consumer behavioral trends that you're seeing out there when it comes to insurance?
The biggest trend that we witness nowadays is around digitization. I think we see it all around us. Insurance is not any different. And also it started involving a lot of hyper personalization offers, customized offers per se, because younger population is getting involved in their decision on financial planning, having more say on what they want about their financial planning. It is natural that we would move towards bigger digitization in insurance and financial services per se. Also, over the last 2 years particularly, I believe it has led us to think more about holistic financial planning rather than just thinking about our short-term or long-term goals. The holistic financial planning would also involve a number of components. It could be about your protection, it could be about your emergency funds. Also, it could be about something that we don't talk about more often. It could be about your retirement planning as well. So holistic financial planning is something that we have started talking about a lot more these days than any time earlier.
Gunjan, clearly one size doesn't fit all. What a 30-year-old's needs are with their dependents and where they are in their journey of life is completely different than a 50-year-old and different from, age to age and person to person. Just wanted to understand what are the key things that one needs to look out for before choosing an investment plan, and why is it still that insurance penetration in a country as vast as India is still so low?
I think the first thing that you need to decide is your goal. What is your financial goal? Once you have decided on your financial goal, you would realize that you can categorize that goal into either a short-term or a long-term financial goal. The short-term financial goal could be your next holiday, could be your next trip abroad. The long-term financial goals, which require much more in-depth planning, would be about your kids' education, would be about your kids' marriage, or it would be, like I mentioned, about your retirement planning. The other point related to why the insurance penetration is so low, a large part of it is related to awareness, which I feel is increasing by the day. It is through number of initiatives that various players have taken. It is through number of initiatives that the government has taken. But as we increase the awareness on insurance, it is bound to the insurance penetration or insurance density, whichever matrix you judge the insurance market with, it is bound to go up as well.
You gave me the cue for the next question to Lavneesh, because Lavneesh, typically you want to save for when you don't earn, and that's where retirement planning comes in. Help us set the context for why saving for your retirement is utmost and crucial.
I think what's happening trend as Ayesha is that from about 10 years back to now, I think people are living a little longer. Earlier people used to live till about say about 70, close to 70 years. So post-retirement used to be about 18 years of life which they used to fend for. That trend has now changed to about 22 years. So there's an incremental trend which is happening in 10 years time, that people have started to live longer by another 4 years more. And the situation in terms of medical emergency or in situation they need to plan and fend for themselves is increasing. So what somebody has to really now start doing is to start looking at that for the next 30 years hence. What we are estimating that this 22 years may become 30 years. So I think those dynamics are changing and we need to look for that.
Lavneesh, how early is early since we're on the subject? Do you need to start from day one of when you begin earning?
So I think while we are here in ET now, it's act now. I think what we need to really look at is that as soon as you start finding surplus money, what we need to start doing is that some proportion of the money which can be allocated to looking at the retirement funds, which could help them fend for themselves for a longer tenure, which could be for 30 years.
For different people, the requirement would be different. Someone might want to retire at 45 also. Someone might want to continue till 60, 65 years. But yes, you should give yourself 2 decades of disciplined savings to start off and have a corpus in mind. Also, the other advantage of starting early is the compounding effect, which we try to underestimate for any financial goal. But I think this is the most important factor.
Lavneesh, when it comes to retirement, how does insurance come into the play? And I ask because there are various other instruments out there which give you that kind of compounding growth. But how is it that you use insurance as a medium for your post-retirement corpus?
So there are different instruments which are there. It depends at what stage and what time and age which you're planning to do. So if you're looking at the age which is lower than 40 years of age, then there are multiple products which help to look at regular savings and getting regular income which could be tax-free down the line. Also, apart from what you can do regular planning at a younger age, I think if the age is older and they have larger corpus, you can tend to buy annuities, and those are which are open market annuities, which are the option which is given by the regulator. So there are a dime a dozen products which can be done in insurance industry, which is well planned in terms of regular at a younger age, or if you want to do a corpus right now and you can get an annuity at this point of time.
But help us understand, because consumers out there get overwhelmed now with the kind of variety of plans that there are. How is it that you pick and choose what suits you as a consumer?
So if I had to just give an example, if let's assume, retirement can be simple accumulation plans, which are basically plans where you accumulate money, and over a period of time you create an age at which you decide to look at a regular income flow, which could be taxable or tax-free. So that's largely the accumulation insurance plans. And the second could be the ones which are totally annuitized plans, which is basically in the form of immediate annuity, or it could be the deferred annuity which could be taken.
Gunjan, taking that point forward, how is it that one chooses the perfect post-retirement plan? What is it that one should be looking at? If you could just give me like 4 things that you need to look out for before picking up an insurance plan.
Yeah, and before I answer that one, while Lavneesh was talking about the different plans, it's very important for every one of us to know what makes retirement planning so different than any other financial planning. Any other financial planning that you will have will be a goal-based planning. Not that retirement planning is not, but it would
Eventual
be for a particular event. It could be about your child's marriage, it could be about your education, it could be about some emergency fund. But here you are talking about a financial planning that will probably involve 15, 20, 30 or more years after your retired life. So the goal itself spans across some 25, 30 years at least after your retirement. Second, I firmly believe retirement planning is something like a good long test innings. You have to be patient about your goal. It's probably like scoring a triple century in a test. You have to ensure that
no T20.
No 2020 there. And also, what are thumb rules if you are talking about retirement plan? The first thumb rule is please take guidance from an expert while you are planning for your retirement. It is too big a task to leave it to yourself to plan for. Second is do not touch your retirement fund till the time you build a corpus that you have thought for. You should always review it in guidance, in partnership with your expert, but do not touch for those retirement funds. Third, you should definitely plan for your health exigency after your retirement as well. Now, what would make a good retirement plan? From whatever we have discussed, I think a plan that kind of nudges you to save for a longer period of time, something that will help you to save regularly and in a disciplined way, would be a good investment plan. Obviously, it will work backwards. You decide your corpus, you decide the time frame that you have, and you start saving or investing regularly for that time period.
Lavneesh, you tell me, what are some of the other benefits that a retirement plan does provide beyond securing your life post 60?
As the situation is now increasing in terms of the years the person has to look forward to post retirement, I think it's the way of living his lifestyle post the retirement. I think it's very, very critical and important. Second aspect is which is the medical inflation, which I think people are not yet estimated. Why not have a life after retirement? People tend to have a life of traveling. I think you have slogged for so many years to work around to make that money. Why not enjoy that money post retirement? So I think these are the three things which come to me as a top of the mind to look at what is important to plan for retirement.
Lavneesh, I can already sense what your retirement plan is. It sounded very personal. World cruise, I guess. Any closing thoughts?
No, I think we've discussed that. The right time is now for your retirement.
So, whether it's spending quality time with your loved ones, or traveling the world, or sponsoring your child's higher education, or investing time in your hobby, with a little bit retirement planning, you have the power to fulfill your wishes while maintaining your financial independence. You can, right now, stop procrastinating, realize the cost of delay, and start planning for your retirement. After all, who doesn't want to retire young and retire rich? With that, we come to the end of this segment. Once again, thank you so much, Mr. Lavneesh Gupta and Mr. Gunjan Sharma, for your enlightening views on this topic. And of course, thank you, viewers, for watching this episode of Live Sessions by HDFC Life.